Hey guys, welcome back to Accelerated Investor. Thanks so much for joining me today. I am always excited, honored, thrilled that you're joining me, whether you're in the gym, whether you are out for a walk, whether you're in the car listening to this. I really appreciate it and would just encourage you to share this all over social media. Don't forget to join our private Facebook group of all of our Accelerated Investor members. Go into Facebook and search Accelerated Investor and make sure you join the group. Listen, today I am interviewing Eric Martel. You might remember back in February, we released a podcast with Antoine Martel. Antoine is Eric's son. They run a turnkey investment business. And one of the reasons why I wanted to interview him is he investing in my market in Cleveland, Ohio. He's investing and buying approximately 10 turnkey rental properties per month. So in this interview, you're going to hear about Eric's strategies for finding deals. You're going to hear about his strategies for securing the financing to acquire these turnkey rental properties. We're going to talk more about his return on investment and how he's focused on return on investment of buying these properties, doing the value add improvements, selling them off to turnkey investors so that he can take the cash, basically what he calls a return on equity, and take that equity, realize the equity, and then put that back into his business so he can do the next deal. We'll also talk a little bit more about his book, which you can find at marteleric.com/book. And this is just really an exciting interview. You'll hear all about the entire process for buying, renovating, selling, securing the insurance, securing the funding for turnkey investments. So whether you want to be a passive investor or whether you want to be an active cash flow investor focused on turnkey rentals, you'll love this interview with Eric Martel.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So Eric, hey, welcome to Accelerated Investor. We're super excited to have you. How's it going today? What are you up to?
Yeah, very good. Well, thank you for inviting me. What are we up to? I mean, we're just expanding our business and try to close down. We have a lot of business that's closing down the next couple of months. Finishing the year strong, and then planning for next year. So we're really planning to grow our business, our turnkey rental resale business next year. At least another 50% next year. That's the growth we're expected. So so we're working hard on that.
Nice. So you have a book that's come out where you teach a little bit more about, you're an author, speaker, you have a popular YouTube channel, break away from the rat race with real estate. You're in the turnkey business. So for those people who are part of our audience that don't understand or don't know what turnkey investments are, tell us about that. Why are you excited about it in this market in particular? And help us understand what exactly are turnkey investments for both single family and multifamily properties.
So I think the key, my goal is really to preach people that their number one goal should be to achieve financial freedom. This is something that's inevitable. We all going to want to stop working at one point. Sure. We want to retire, want to spend more time with family, and you should start working on it now. That whole concept of saving a lot of money for 50 years and then retiring at 60 or 65, this is not going to work out for most people. Right. 401ks are going to be, especially with the pandemic, right? The 401k is going to be it's going to be affected. Even your corporate pension plans are going to be impacted by what's going on. They were already in trouble before, but now with the pandemic, it's just going to make it worse. So that's the number one thing, is that people should really focus on financial freedom. And you do that. The best way to do that is passive income with rental properties. When you get started, you don't have that much time. So turnkey is good. We sell these single family rentals. So we buy distressed property, we renovate them, make sure they're good, clean, that they have good mechanics, like the water heater and stuff like that. So we really do a good job renovating them. We rent them out, and then we sell them to turnkey investors who are trying to build this passive income portfolio. So it's already rented. You know what the rent is. You know everything about it, and basically it's cash flowing from day one. So
nice,
very easy.
So when most of your buyers are buying, I imagine a lot of these people probably have a day job. They probably make an income. It could be as a teacher, could be as a nurse, could be as a doctor, an attorney, and they're looking at real estate to diversify their portfolio, but they don't necessarily want to do all the steps that go into it, finding deals, hiring contractors, renovating the deal. They just kind of want to do the last step, which is deploy their money and get a return. So describe sort of a typical deal. Give us some numbers, typical kind of purchase price, renovation, after repaired value. What are people buying them from you guys? What kind of returns are they getting from the rents and the net income that comes from that?
Yeah. So, and you're exactly right. I mean, so one of the reasons why I'm saying that, people that if they want to achieve financial freedom, they should go and start with turnkey. Because you're busy with your job. You don't have time to find contractors and get multiple quotes from contractors and all of that. So get turnkey, get your passive income portfolio going. Then after that, then you can, once you achieve financial freedom, then you can do whatever you want, and then invest in all kinds of other real estate strategy. For us, the markets that we selected, I mean, we wanted to have cash flowing markets. So we looked at market states that were landlord friendly, that had and cities that had good growth, sustainable growth, low unemployment, and all of that. And Memphis and Cleveland were the two cities that we found particularly appealing to us. Good business diversification as well. As you know, I mean, you invest in Cleveland, so it's a great market. Amazon is investing in there. I have Cleveland Clinics that's in there, the whole health tech corridor. So these are two very strong kind of industry kind of moving forward. The health tech, everything that relates to the online retail these are strong markets moving forward. So we're pretty excited about Cleveland. Memphis is the same thing with St. Jude's Hospital, with also FedEx is there, So these are the good markets. And then so the typical the purchase price for our real estate investor is about $80,000 to $100,000. So that's pretty much where.
So that's the end price that's what the turnkey buyer pays.
That's right.
When the product is all done.
That's right.
Okay.
And then the rent is around $800 to $950 around there. We connect our real estate investor into with the lender, with the property management company. So we handle all of that. We do all the introduction, the insurance company. So we understand that they don't have time to do this. So that's why they're buying from us. And then when it's all said and done, they normally end up with around $250, $300 net cash flow at the end. Gives them about 15-16% cash on cash return after financing, after they put their 20% down.
Got it. So when you say cash on cash, so I need the audience to understand. So Eric and his team come in, they buy a property, let's say for $60,000, $70,000. They renovate it. It's in great condition. Sell the property, let's say for $100,000. And Eric, just jump in here if I get any of these numbers wrong. Somebody buys it, a turnkey investor buys it for $100,000. It's been fully renovated, fully tenanted, took care of the mechanicals, updated all the plumbing, electrical, flooring, kitchen, bathrooms, paint, carpet, roof, windows, et cetera, whatever it needed. somebody comes and buys it for 100 grand. Typically what they're doing is probably getting a rental loan from one of the rental lenders or local banks for 80% of that purchase price. They're putting down $20,000 plus or minus with some closing costs, right?
That's right.
So that $20,000 down, it could be $18,000 down, could be $22,000 down, whatever the number is. And then as Eric described, they're getting $250 to $300 per month. So somewhere between, let's say, $2,500 to $4,000 of net free spendable cash flow. That's after expenses and after debt service. That's why he's describing they're getting maybe a 15 to 20% cash on cash return because they put up 20,000 of cash. They're getting back maybe $2,000 to $4,000 of cash. That's what we call a cash on cash return. And oh, by the way, which Eric probably will get into, they get the benefits of real estate, which means appreciation, principal pay down through the mortgage being paid, and write-offs on their tax returns, the depreciation. So if you can get a net spendable cash on cash return, which most people, when they look at mutual funds, they look at stocks, right, Eric? They're looking at, I'm going to get a 9% return. Well, that's a 9% cash on cash return. You're looking at basically 50% better or 100% better than that. And all those extra benefits, which is appreciation, depreciation, principal pay down. So just describe that. So if somebody wanted to invest in one of your turnkey deals, I mean, I sort of just described it, but in your words, what else did I miss? What other benefits are there? And again, this is why people work with you.
Yeah. I mean, so for me, I mean, yeah, you're exactly right. Obviously appreciation, I live in California and I was in the San Francisco Bay Area. Now I live in LA. And here they love the appreciation aspect of it. And they are always thinking, oh yeah, this is, they forget about the cash flow. So they actually go negative on the cash flow in order to get the appreciation. But the appreciation here is about, 8, 9% sometime. And actually right now we're seeing kind of like a slowdown on that. But I mean, you invest in Cleveland and the markets that we're investing in, I mean, the house is the same house that we sold last year. We're selling them now, the same kind of houses, like 10% more in the markets that we're in. So we're seeing a very strong appreciation in the markets, in markets like Cleveland. And that is very comparable to what we're seeing in California. So that's one aspect of it.
But you're also getting the cash flow in Cleveland.
Exactly. In Cleveland, on top of that, you're getting the cash flow. So that's fantastic. I mean, you just get cash coming back. And then that cash is, instead of flowing directly into your normal 1040, your normal income tax form, you can also deduct the depreciation from that. So on $100,000, you divide by 27.5, and that almost offset your entire net cash flow from the property. So you basically are getting the cash in your bank, but you're not paying taxes on that cash for the most part. So that's phenomenal. And for me, I'm looking at a very long-term horizon. So I'm building not this company for me to retire. I'm building this company for my children and my grandchildren, and that's what I'm doing. My investment horizon is really it's like 100 years. That's what I'm thinking about.
Sure.
I want to have these single family house to be positioned in very good market that I think they're gonna grow, and that 50 or 75 years from now, that's not going to be a single house anymore. That's going to be, a major, like maybe a bigger suburb or an extension of Cleveland, or, more in the downtown core in Memphis and stuff like that. So the value is really going to significantly appreciate over time, even more than the regular 8 or 9% that we're seeing right now.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com wholesaling.com/podcast. And even if you don't, you get any appreciation, right? You still have the cash on cash return, which is going to be north of 10%, potentially 15, 20%. And you have the principal pay down. So again, if you took out a 30-year loan or a 15-year loan, that property is eventually paid off. It's a real asset that you can sell. And you have the write-offs on your tax return. So most of that profit and income is sheltered from taxes, which using all of those, stocks, bonds, mutual funds just cannot compete. The only benefit to owning stocks, bonds, mutual funds is liquidity, right? So we do have to recognize that stocks, bonds, mutual funds, you could sell in a heartbeat. You could sell them overnight, turn that into cash in the next 5 minutes, versus real estate is a less liquid investment that it takes a minute to find a buyer, let's say 30 days to find a buyer, and then it takes that buyer 45 days to close. That might take 3 months to create liquidity. So that's the offset. But a lot of people are looking to put this money in play, right, Eric? And they're looking to just kind of set it and forget it. So they're not looking to get liquid anyway.
That's right. Yeah, exactly. And I think if you're getting, this is the advantage between the single family and multifamily as well. I mean, if you're just getting into real estate, get a single family home, and you can really slowly ease your way into a real estate investor. And then if you feel like you want to kind of like reposition or change something, or you want to go into some other types of investment, you can sell one house. You don't have to sell, if you have an apartment building, you have to sell the whole thing. But with single family, I mean, you need some money for something, some other investments you want to do, or whatever you want to. I don't recommend it, but you want to buy a boat,
Sure.
Then you can sell a house and, buy a boat and do something like that. With multifamily or commercial, obviously it's a lot harder to do. You have to get a bigger boat then if you sell.
Yeah. But you also got to sell the whole portfolio at the same time, right? I mean, we're in that middle of that now. We've got
exactly. Then you can still do the 1031 exchange. You have all the same benefits that you would have with an apartment building, but most of them. And then, but you can still do a 1031 exchange to move in the portfolio into something bigger if you decide to do that in the future.
Yeah,
definitely.
So Eric, let me ask you some questions about your model. So some questions around, how do you find deals? How do you manage properties? How do you find investors? So you live in California. How are you finding deals in Memphis, Cleveland, St. Louis, some of the markets that you operate in? How are you finding deals to acquire in order to turn them into turnkey?
Yeah, so we're buying about 10 houses a month and about selling the same. So we currently have we're rolling. We have about 50 houses in our portfolio right now that we're sell 10, buy 10 basically every month. And then we have our typical turnaround is about 3 months.
So you got some product in the middle that's being rehabbed. Yep.
Exactly. So we have, when we have this kind of volume, you would know this, but you have to kind of you hit everything. We obviously look at MLS. We also look at pocket listing. We have some good the realtors that are that they're very knowledgeable and they know which market to look at. They knock on doors and say, hey, do you want to sell your property? And actually in January we also started a wholesaling company, a wholesaling operation called Rocket Offer. And then so they're also doing all kinds of calling and all kinds of reaching out to owners in the markets that we're interested in. And we're also buying from wholesalers. So wholesalers that have a deal that works for us. I mean, we're always interested in looking at deals, and if they work for us, then we definitely buy from wholesalers as well.
Got it.
So yeah, you hit on all cylinders. You have to do everything, and
Eric, what kind of markets are you looking at? Are they A-class markets with, white collar? Are they B-class markets, a little mixture of white collar, blue collar? C-class markets where it's more blue collar and you're adding in, not high crime and you're not the hood, but there's a little bit more crime, there's a little bit lower income, or they D-class markets where the cash flows can be super high, but you're dealing with some more lower income and higher crime type of markets. Which market would you describe your business operates the best in?
So we like the C and B class. Typically, in any kind of downturn, the A class and luxury kind of level, they tend not to cash flow, and then they tend to also have a harder time. And we're seeing this right now, like a harder time finding tenants in the A and luxury kind of category. But the B and C class, these are very solid kind of market. And the people that the tenants and all of that, I mean, they are typically pretty solid tenants. Yeah, you have a little bit more potentially some issues here and there. You do have some blue collars worker that, they lose their job and all of that. They're a little bit more impacted. But in general, I mean, these are, good, hardworking people. They maintain the properties pretty well in general, and we don't have too many problems. I mean, we still do a good background check and all of that. We don't do currently like Section 8. So we just focused on hardworking people, which sometimes they're called like workforce housing. So that's kind of what we're looking at.
Nice.
And yeah.
And Eric, let me ask you, how are you finding your investors? You really probably have two types of investors. You probably are paying cash for a lot of these properties. You're buying 10 properties a month. So you may have a line of credit from a bank, or you may have private investors that are giving your company the money to acquire and rehab the property. That's one type of investor or one type of financing. Then the second type of investor is the investor who's buying the end product, who's putting it into their portfolio, and it's turnkey. So help me understand those two buckets, how you're financing your purchase, and then secondly, how you're finding the end buyer.
So most of the purchases are financed with our own money, or we have private money lenders. So these are private individuals that are lending us money and then we're paying them interest only on every month. And then we have a little bit less of that. We have more like some joint venture investors. So people that are going to share in the risk with us. So, and then they provide most of the fund. Typically we do like 90%. They fund 90% of the purchase price and rehab. And then we provide the rest. And then we split the profit 50-50 basically.
Got it.
So if people have an appetite for that, the returns are a bit higher, but also there's share a little bit more in the risk. The PML, this is like, if you want passive income with no worries. So this is another one where, you basically get a check every month and you don't have to worry about it. It's consistent and pretty low risk. So that's on the investor. On the turnkey investor, the buyers. These are, we do a lot of marketing, and our strategy is really to position myself and my son, also Antoine Martel, is also kind of like going out there. We want to position ourselves as experts in real estate, and I'm really going after the demographics of the baby boomers and earlier the Gen X and all of that. They have a family and all of that, and then they have to think about retirement. They have to think about building a legacy for their children. And so that's the audience that I'm kind of going after, and help them prepare to make sure that they reach their goal of achieving financial freedom and retire early. Right. My son is reaching out more towards the millennials. Millennials have a little bit different challenges. They have a high student debt. They have all of that. They can't, if they live in California, they can't buy a house. They constantly, it doesn't matter how fast they're saving money for a down payment for a house. The house goes in price faster than they can accumulate the down payment. So, but they want to invest in real estate, so they invest with us on that. So we talk about these things, and basically our marketing and the books and all of that helps bring people that want to do this. They want to build a passive income portfolio. They see the value in what we're doing, and then they want to buy these. They want to get started, basically.
Yeah. So we had Antoine on this podcast back in February. This was pre-COVID. We talked a lot about his strategy of using social media, specifically Instagram, Facebook, and Twitter and things like that, for him to build up his YouTube channel and those kind of things in order to appeal to the millennial investor who wants to do turnkey rentals and own apartment buildings and those kind of things. You are working probably with a different audience that maybe looks a little bit more like you, acts a little bit more like you. He's appealing to his audience, younger generation.
A lot more questions.
Yeah. And so your audience, it's a very different marketing approach. Whereas those younger crowd is probably on social media, they're probably on the internet, they're probably on their mobile device. You're appealing to maybe a little bit more older, mature crowd. What types of marketing? Obviously, podcasts will work, books will work. What other types of strategies are you guys using to, again, acquire eyeballs and marketing to those? Because they're two very different audiences. So I guess my question is how does your marketing differ from his marketing?
Yeah, so my marketing is more like on LinkedIn. So I do a lot of on LinkedIn. I also write. I'm a contributor on Forbes magazine, on the part of the real estate council there. I also write for entrepreneurandbusiness.com and a bunch of other online magazine as well, like Disrupt magazine. So I have quite a few articles there, and so that's one of the audience. That's how I reach them. Facebook is also pretty big on my side as well. So I have a Facebook group in there and a page. So that I market on that. Market on Twitter, and I do a little bit on Instagram. But Antoine is the king of Instagram. That's for sure. And finally YouTube. So I do a lot of YouTube and try to do a lot of YouTube videos and all of that, because I think there's a lot of the people, my followers, they actually go and they listen to a lot of YouTubes and podcasts as well. So that's the other thing.
My newest and most powerful real estate investing book, The Flip System, is now available. And for a limited time, you can grab your free copy at getflipsystem.com/podcast. Using the same proven principles, secrets, and investing strategies I'm sharing in this book, I've been able to personally close over 750 highly profitable real estate deals over the last 15 years, make over 400 private lender loans, raise over $30 million of private money, and acquire over 2,000 units of apartments. Get my newest book now for free for a limited time at getflipsystem.com/podcast. That's getflipsystem.com/podcast. So you're just still using a lot of the technology platforms. I was wondering if you would say something like we're using direct mail, or we're using more of an offline strategy, like physical newsletters, or doing any kind of like live events where some people will come for dinner or drinks or some sort of social hour and do some of those types of things. But it still sounds like, even though your audience and Antoine's audience are very different, you're still using a lot of the technology platforms like podcasting, YouTube, LinkedIn to still create the audience that's helping you doing your private lending and ultimately buying your end product as well.
That's right. So so that's exactly. People are still there. Like even the boomers. I mean, of course, there's some boomers are not really on Facebook, but boomers still have a strong presence on Facebook. The Gen Xers, they're there. They're definitely there, and so I can definitely reach out to them through Facebook and LinkedIn. They're very focused on their professional profile and all of that. So I do a lot of posts on LinkedIn and kind of like drive them to the other platforms that I have as well.
And do you ultimately have, how are you capturing the lead Eric, and Antoine probably answered this. By the way, Antoine's episode was episode number 97, was released back in February 21st of 2020, right before COVID hit. But you can check that out as well. So you can kind of compare what dad and son are doing differently and how they compare. So check that out, episode number 97. But is there a platform that you're using or some sort of opt-in page or software that you're using to have your investors sort of opt in for information? Is there a website that you're using, or how does it work for you to capture their information, first name, last name, email, phone number, so you can follow up with them and show them some deal flow?
Yeah, I think it's critical to have a CRM, like a customer relationship management software. So we're using Zoho, and we've customized it and automated a lot of these the processes in that CRM software.
Got it.
So as soon as they get in as a lead. We have a couple of people, salespeople that are kind of connecting with them and engaging with them and to see what they're looking for. I mean, our first step really for that whole process is about education. It's about educating. And this is what Antoine and myself are doing. We're really out there to educate people, make them aware of what is going on and what we think they should be focusing on. And then once they get into the lead, as a lead in our system, then they get every week we send an email campaign on Tuesday with an article, a topic, and on Thursday we send another one about a property that we have for sale to kind of like get them familiar also with the numbers. And all of that is in the CRM. We also have, even on our website, we even have, as soon as somebody goes on our website, we get notified and we can actually go and chat with them on our website. Automatically creates a lead. If they have any questions and stuff like that, we can answer them as well there.
Nice. Very good. So Eric, last kind of question is now that you've seen this kind of success in building this, you've done it virtually. There's probably some mistakes you've made along the way. There's probably some things you do different. What kind of advice would you give, your maybe less experienced self, or what kind of advice would you give your son if he was starting over, or what kind of advice would you give our audience, and some lessons you've learned along the way that's, provided you a lot of success that you've had?
So I think the number one is about the mindset. It's about a more flexible mindset and kind of step away from that 9-to-5 job. I mean, we're driving more and more towards a gig economy. It sounds interesting and exciting, but in fact, that means an economy where you get paid a certain amount of money, but you have to pay for everything else. You have to pay for your benefit. You have to pay for your healthcare. You have to pay for your equipment and all of that. So. And then when that's turned off, when the salary or your income turns off, or you have the ebbs and flow of your income, it's a difficult situation. So my first one is about the mindset. It's really about realizing that, you may have a 9-to-5 job right now. It may sound like it's a secure job. We've all had these secure job where you go in your manager's office and they say, we don't need you anymore, see you. So, nothing is secure. So you think about that and prepare for the time when you want to be in control of your income. And this is why, as I mentioned earlier, it's like your number one goal should be financial freedom. You need to start working on this as soon as you can. And so that's what I would have said. And my first apartment building, I bought that when I was 18 years old. And at that time, my mindset was like, it was just like something that I had this mentor and I said, okay, this is something that I can do. I'm going to learn something great. And I never thought, this is going to be like, I'm going to build a passive income portfolio and I won't have to work or anything like that. That's not my thinking at the time. If I had to tell myself, talk to myself in the past and say, no, you need to kind of focus on that. This is the thing that you need to focus on and build on that portfolio and all of that. So there was a lot more learning that I could have done at that point to learn about using other people's money and build a portfolio and all of that. So
I mean, imagine, Eric, if out of all the deals that you've done, all the deals that I've done, if you started from the beginning and sort of sacrificed a little bit of the immediate gratification of flipping a house, wholesaling a property, and kept every single one of those deals and manage them and babysat them and kind of put all your eggs in that basket. And then, as Henry Ford said, put all your eggs in one basket and then, watch that basket. Make sure that you watch that basket. Imagine if we did that from the beginning. Many people get into real estate thinking of, I want to make a lot of income. I want to get out of debt, which is great. But the best way to do that to satisfy today's needs and the long-term needs is to buy and hold, invest for the long term, because that piles up and you make this equity, this profit in perpetuity, and also pay very little tax. So that would be the advice I'd give to my former self, is just hold everything you can. Don't sell a single property. Keep them all forever. We have a huge portfolio of 3,000 units of apartments, but we would have a much bigger portfolio and been financially independent much younger.
Yeah, I mean, that's a good advice. For me, I really focus on a couple of things. I focus on the returns. To me, that's very important, and also return on equity. As you own a property and the property increase in value, you end up with equity, and I want to make sure that I leverage that equity as much as I can. So to me, that's something that's very important. And so this is one of the reasons why I sold my primary residence a couple of years ago, because I had a massive amount of equity in there, and I said, well, I want to leverage it. I want to do something with it. I had maxed out the line of credit. I had maxed, the mortgage was, I could have extracted maybe an extra $100,000 or something like that, but that was not enough. So we decided to sell it. And that really jump-started, Martel Turnkey at that point, because then we were able to, triple the volume that we were doing, the rehabs, and do a lot more with our cash. And that's also when we got started into the apartment buildings.
Nice.
In Memphis. So so that's kind of what I'm focused on. I'm kind of I like the buy and hold, but I also focus on the return on investment and the return on equity. This is why right now, when we're looking at our apartment buildings in Memphis, we're looking at the return, and then we're thinking, well, if we had this equity, so we want to extract the equity out of that, but we're saying, like, if we can get the max equity out, if we sell the property and we invest it back into Martel Turnkey, the returns is going to be significantly more than owning that apartment building. So that's why we have a couple of apartment buildings that we're selling right now.
Got it.
Midtown Memphis. But that's because we have this opportunity with we running a turnkey business, right? So we have this a different thing. If you're just looking at building a passive income portfolio, of course we wouldn't be selling that. We would just be holding on to it, and
fantastic.
But that's because we have that other opportunity. Yeah,
that's right. Fantastic stuff, Eric. Listen, I understand your book is out. People can get access to your book. Where would they be able to find that, and where can our audience connect with you?
So obviously it is. Oh, I think I have a copy here. Here it is. Stop trading your time for money. You can find it on Amazon, obviously. So, but if you want, you can also go to marteleric.com/book. If you can't find it on Amazon, and there's a button at the bottom, you can just click on that, and it's going to bring you right to the book on Amazon.
Fantastic stuff. Well, Eric, listen, thanks so much for joining us today on Accelerated Investor. I had a blast with your son, getting to know him. It's great to meet you on the other side of this thing here at the end of the year. Don't forget, my audience, to check out episode number 97 with Antoine. And don't forget to leave us an amazing review. If you enjoyed this interview, share this all over social media. Eric, thanks so much for joining us today on Accelerated Investor.
Thank you.
So there you have it. I hope you enjoyed that interview with Eric Martel. Don't forget to check out the interview I did with his son, Antoine. It's episode number 97. If you enjoyed this interview, please go in wherever you check out your podcasts, leave us a rating and a review. Also, let me know how we did. Leave us a comment. If you leave us a rating and review, also take a screenshot of that, send it into my office. We'll send you a free Accelerated Investor t-shirt. Guys, listen, I know there's a lot of places you can go to get your information. I'm always so honored, so excited, so humbled that you would take the time to learn this content and information from me and the guests that we have and the solo casts that we do. So don't forget to check out, again, episode number 97 with Antoine. We'll put it in the show notes. Also, grab Eric's book. Grab Eric's book at marteleric.com/book. Finally, don't forget to go into our private Facebook group only for our Accelerated Investor members. Also, if you need more coaching to, build your income portfolio, recruit private investors, go visit joshcantwellcoaching.com. Thanks for being here today on Accelerated Investor, and we'll see you on the next episode. Take care. Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're gonna do then is every week we're gonna pick our favorite rating and review, and we're gonna send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.